All right, let's get right into it. We're tackling a question that probably has you scratching your head. Why on earth are stocks hitting record highs when, for a lot of us, the economy feels, well, pretty uncertain?
I mean, you hear about inflation, maybe hiring isn't so great, people are worried about spending. It really feels like we're on shaky ground, right? But then you look at the stock market, and it's just record after record. So what's going on? Is the market just completely disconnected from reality, or is there something else at play? Let's dig in and figure this out.
You know, on one side, you've got what I'd call the real economy. It's the one you and I live in every day. People at the mall, local businesses trying to make it, the jobs report on the news. It's what we feel. And then you've got Wall Street. And lately, it feels like it's operating in a totally different galaxy. It's like these two things are telling completely opposite stories.
So this major disconnect, that's what we're calling the economic paradox. And to really understand it, the very first thing we have to do is bust a huge, super common myth.
Okay, if you take away only one thing from this, let it be this. The stock market is not the economy. I'm going to say it again. The stock market is not the economy. Getting this is absolutely crucial because they're measuring totally different things and they're on completely different clocks. All right, so let's break down exactly what that difference is. Once you see it, all those confusing headlines start to make a whole lot more sense.
Okay, check this out. The key difference here is all about time. Think of the economy as a photograph. It's a snapshot of what's happening right now. Today's jobs, today's spending. The stock market, that's more like a fortune teller. It doesn't care so much about today. It's a giant betting machine trying to predict the future, what profits are going to look like 6, 9, 12 months down the road.
And that's the whole game right there. The market is always looking ahead, usually by about 6 to 12 months. So yeah, the news today might be a total downer, but investors? They're already placing their bets on a brighter future. They're betting on inflation coming down, on companies getting back on their feet. The market moves on the rumor of good times, not the reality of them.
Okay, so if the market is so optimistic about future profits, you have to ask, why? Where is all this confidence coming from? Well, let's pop the hood and look at the actual engine driving this thing. And you might be surprised at how small that engine really is.
This right here is a huge piece of the puzzle. You see, the S&P 500 isn't some fair democracy where every company gets one vote. Not even close. Get this, just the top 10 biggest companies, mostly the tech and AI giants you know, they make up a whopping 40% of the entire index's value. 40% from just 10 companies?
Yep, we're talking about the usual suspects. Apple, Microsoft, Nvidia, you know the names. With all the excitement around AI, these guys are just crushing it. And they're so big, so influential, that when they have a good day, they can literally drag the entire market up with them, even if the other 490 companies are having a terrible time. So when the news says the market is hitting new highs, a lot of the time it's really just these giants doing all the heavy lifting.
And it's not just about the AI boom. These massive corporations are also masters at protecting their bottom line. They're super quick to cut costs when they need to. They do these things called stock buybacks, which is a clever way to make their profits look better on paper. Plus, they've had help from things like lower corporate tax rates. Honestly, these companies are just built like tanks, designed to power through economic storms.
But wait, there's more. This isn't just a story about what's happening inside the US. There's another huge factor at play, money pouring in from all around the globe.
Think about it. When things get shaky around the world, politically or economically, where do big investors park their money to keep it safe? For a long time, the answer has been the United States. We've got the world's reserve currency, our markets are massive and stable, and there are strong legal protections. So, in a weird way, chaos elsewhere in the world can actually push US stock prices up as it becomes the safe harbor in a global storm.
Okay, now we're getting to what is maybe the weirdest, most backward-sounding part of this whole thing. It's this crazy idea that sometimes bad news for the economy can actually be good news for the stock market. I know, it sounds totally nuts, but trust me, there's a strange kind of logic to it. And if you want to understand how the market works today, you gotta get this. So let's play this out. Imagine a really weak jobs report is released. Bad news, right? Fewer jobs, economy slowing down. But what do investors see? They don't see bad news. They see the Federal Reserve getting ready to step in. They think, aha, this means the Fed is probably going to cut interest rates soon to give the economy a boost. And lower rates are like rocket fuel for companies. It's cheaper to borrow money, which should mean bigger profits later on.
So the market rallies today based on the expectation of those future rate cuts. Crazy, right?
And look, this isn't just some abstract theory. This is literally what has been happening. It's a perfect example of how bad news for Main Street can become good news on Wall Street, turning everything we thought we knew completely upside down.
All right, so we've covered a ton of ground here, right? We've talked about the market being a fortune teller, not a historian. We've seen the massive power of just a handful of tech companies. We've talked about global money looking for a safe place to land. And of course, that bizarre bad news is good news logic. So let's tie it all together.
So when you boil it all down, here's the deal. Stocks are rising because the market is making a huge bet on a better tomorrow, and it's pretty much ignoring the problems of today. And what's fueling that bet? Well, it's a powerful cocktail. You've got the unstoppable force of a few tech giants, a river of global money flowing into the US for safety, and this constant hope that any sign of economic weakness will trigger the Fed to cut rates and keep the party going.
And so that leaves us with the million-dollar question, doesn't it? The market is optimistic, it's betting on a stronger future, but at the end of the day, it's still just a bet, and bets can be wrong. The real test, the thing we'll all be watching for, is whether the economy we all live in can actually catch up to Wall Street's sky-high hopes. Something to think about. Thanks for tuning in.